Most people lose money in the stock market because they chase hype, but smart investors quietly buy 5 Indian companies that are already compounding into generational wealth. In the next few minutes, you will see why they win and how you can think like them. And remember, this is not financial advice, just my personal research and conviction. Stock number 1, HDFC Bank. Among the 5 stocks I plan to hold long term, my first pick is HDFC Bank. And honestly, there is no doubt about it. Stability, growth, consistency, it ticks every box. Now let's see why it stands out. HDFC Bank is India's number 1 private sector bank and one of the most trusted names in finance. After its merger, the bank made 2 bold moves that showed real confidence in its future, like issued bonus shares 1:1 for the first time ever. Announced a 5 rupees special dividend per share. These steps prove that management believes strongly in the bank's long-term vision, which means strong performance equal to steady returns, like return on asset 1.9%, return on equity 14 to 17%. That means HDFC Bank has been creating wealth consistently for its investors. Here, loan growth is solid, especially in SME and retail segments, both growing in double digits. Even top research houses like Jefferies, MK and Motilal Oswal have a buy rating. An analyst expect its profit margin to improve further. Now let's see recent results. Q1 fiscal year 2025. Net profit 18,155 crore. Net interest income 31,440 crores. Non-interest income 21,730 crores. Almost double. Loans up 6.7%. SME loans plus 17%. Deposits 16+%. Bonus shares 1:1 dividend 5 rupee per share. In simple words, the bank is growing fast and staying safe. Now let's see valuation snapshot. Current price 2020 rupees. Price to earnings PE 22x. Profit CAGR 5 years data 21%. Dividend payout 23%. Its intrinsic value is around 1750 to 2400. So it's fairly valued considering its stability and growth record. Now let's see in big picture view. HDFC Bank is not just a bank. It's the financial backbone of the HDFC group, which also runs businesses in mutual funds, insurance, broking and asset management. It's deeply connected to India's entire financial ecosystem. So for anyone looking for a safe, steady wealth builder, HDFC Bank is a strong candidate. It balances growth and security better than most Indian companies. So tell me, is HDFC Bank already part of your portfolio? Or do you own any of the next stocks I am about to share? Drop your answer in the comments. And let's move to the stock number 2, Reliance Industries. My second long-term pick is Reliance Industries, and as the name suggests, it truly stands for trust. Investors have relied on this company for decades, and it continues to grow stronger every single year. It's a business empire, not just company. Reliance is not one business. It's a massive ecosystem that runs across India. Think of it like an empire built under one roof. Oil, gas, refining, telecom, geo, retail and green energy. Under Mukesh Ambani's leadership, Reliance has built a brand that connects to almost every Indian household, from your mobile network to the mall you shop at. So why I believe in it? Reliance earns strong cash flows from multiple businesses. Core engines like geo, retail and oil to chemicals keep delivering solid profits. Its new bet on green energy, solar, hydrogen and renewable projects shows a clear future-focused vision. Now let's see Q1 fiscal year 2025 highlights, April to June 2025. Net profit 26,994 crore, up by 78%. Revenue 2.73 lakh crore, it's up by 6%. EBITDA 58,024 crore, it's up by 35.7%. Margins 21%, shows efficient cost control. Geo profit 7,110 crores, it's 25% growth. If you see ARPU 208 rupees, users around 480 million plus. Its retail profit 3,271 crore, 28% growth. Its revenue 84,000 crore plus. If you see capex 29,875 crore, mostly for green energy and solar projects. In short, Reliance is not dependent on one industry anymore. It's spreading across technology, energy and retail, ensuring balance and long-term stability. Let's look into valuation and outlook. Current price 1400 rupees. PE ratio 20 to 25x. It's fair range for a diversified leader. leader. Its intrinsic value 1200 to 1250 rupees. Even at this valuation, Reliance remains strong because cash flows are consistent, businesses are diversified. Analysts like Motilal Oswal, ICICI Direct and Kotak Securities rate it a clear buy. Now let's see why Reliance is different. Reliance is literally shaping modern India, from petrol stations to geo connections, from supermarkets to solar power. It has a hand in almost every part of our lives. This kind of diversification make it future proof and low risk compared to most Indian companies. So Reliance is a company that doesn't just survive market cycles, it creates them. It's an engine for growth, and for long-term investors, it offers both stability and expansion. That's stock number 2. Solid, diverse and future ready. Now take a deep breath, because the next company, TCS, represents India's brain power on global stage. Let's talk about that next. Stock 3. TCS, Tata Consultancy Services. When you hear the word software, what's the first name that comes to your mind? For most Indians, it's TCS. That's the impact this company has created globally. TCS stands for Tata Consultancy Services, one of the world's largest IT service providers. Backed by the Tata Group, the name itself carries trust, credibility and global respect. Now let's see why I believe in TCS. TCS delivers technology and digital transformation to almost every industry, from banking and healthcare to retail and manufacturing. It's a cash-rich, depth-free company with a reputation for steady performance. As the world goes more digital and AI-driven, TCS is the one of the key players powering that shift. If you see Q1 fiscal year 2025 highlights, April to June 2025, revenue 63,437 crore, slightly up year on year. Net profit 12,760 crore, it's up by 6%. Operating margin 24.5%, it's steady improvement. Cash flow 12,804 crore. It's nearly 100% of profit. Excellent efficiency. Total contract value $9.4 billion. It's solid pipeline. Dividend 11 rupee per share. So in short, TCS continues to deliver stable profits, strong cash flows and reliable growth even during global slowdown. So its key fundamentals are depth free. Yes. Dividend payouts regular and strong. Return on equity ROE, it's excellent. Valuation PE 22x, slightly premium but justified. Its market cap 11 plus lakh crore. Promoter holding 72% by Tata Sons, showing deep confidence. Even when market fluctuate, TCS stays consistent. A true example of a slow and steady compounder. Now let's see its future outlook. Recently, TCS announced global restructuring and automation, including reducing 12,000 roles, not to cut costs blindly, but to improve efficiency and invest heavily in AI, cloud and automation. With partnership across Microsoft, AWS and Google, the company is clearly future-proofing its business for the next decade. So TCS may not give you overnight returns, but it's the kind of stock that quietly compounds wealth year after year. Personally, I accumulate TCS during every dip because it's built on 3 timeline qualities: consistency and evolution. If there is one company that truly represents India's brain power to the world, it's TCS. That's the third stock on our list. TCS, the steady compounder. Next, we will talk about a company that driving India's digital revolution, Bharti Airtel. Let's dive in. My fourth long-term pick is Bharti Airtel. And if there's one word that defines it, it's strength. Strong business model, high entry barriers, and huge growth potential in what we now call Digital Bharat. It is more than just a telecom company. Airtel is not just about mobile networks anymore. It's become a digital infrastructure powerhouse. It's India's second largest telecom operator, and it's growing fast in Africa too. The company has built a wide moat, from 5G rollout to fiber broadband, data centers and digital payments. That means Airtel is no longer just connecting calls. It's connecting India's digital future. Now let's see why I believe in Airtel. Airtel runs its business with strong financial discipline. Rating agency CRISIL recently upgraded it to AAA, that is stable, the highest level of financial strength. That means the company manages its debt and growth extremely efficient. Now let's see Q1 fiscal year 2025 snapshot, April to June 2025. Its revenue 38,506 crore, EBA TDA 19,746 crore, margins 53.7%. It's excellent efficiency. Net profit 4,160 crore. It's up by 158% and 100% QOQ. Its phenomenal growth. ARPU 249 rupees. It's industry leading. And Africa business revenue up 25%. Its profit up by 20%. So the takeaway, Airtel is not just chasing cheap volume. It's focusing on premium customers and high quality revenue. Now let's see long-term view and valuation. Share price 1930 rupees. PE ratio 32x. It's slightly premium but justified because of steady cash flow and digital growth. Intrinsic value 1250 rupees to 1500 rupees. But Airtel is not a stock to judge by valuation alone. What truly matters is its business moat, consistent cash generation, and 40% market share, huge in a highly competitive industry. Now let's see its digital growth engines. Airtel is now expanding rapidly in Airtel Business, B2B services, Airtel Payments Bank, FinTech and digital money. Both are scaling fast and together they position Airtel as a key player in India's digital economy. So Airtel is a capital heavy business, but it executes brilliantly. Its focus on premium customers, solid management and financial discipline makes it one of the most reliable digital plays in India. Like growth, cash flow, industry leadership, Bharti Airtel is not just a telecom stock, it's the backbone of the digital Bharat. And my last pick on this list is BSE, Bombay Stock Exchange. This one is truly special because BSE, Bombay Stock Exchange, is not just another company. It's the foundation of India's financial markets. Now let's see why BSE. It's India's oldest stock exchange. It has zero debt. It enjoys high profit margins and it plays a central role in almost every market trade, equities, derivatives, IPOs and mutual funds. In short, every time someone invests in India, directly or indirectly, BSE benefits. And it has strong financial performance. Now let's see Q4 fiscal year 2025 results. Total income 916 crores. Operating profit 324 crore. Net profit 494 crore. Operating margin 69%. Net margin 53%. So BSE is super efficient. It earns more while spending less. And because its business runs on digital infrastructure, profits rise automatically when trading activity goes up. Now let's see why I believe in BSE long term. Zero debt, maximum return. Here no loans, no interest burden. Every rupee earned goes straight to the shareholders and built-in leverage on market activity. When markets are active, more trading, more IPOs, more mutual fund flows. BSE revenue increases naturally without additional cost and retail and SIP boom equal to big tailwind. India's mutual fund AUM crossed 72 lakh crore in May 2025. More people are opening demat accounts and investing money through SIPs. This growing investor base is like free growth fuel for BSE. Analysts at Motilal Oswal call BSE on their top picks for India's retail market recovery, alongside names like Angel One and HDFC AMC. And here's something interesting. If NSE ever launches its IPO and become a listed company, the spotlight will turn to this entire sector. Since BSE is already listed, it could see a major re-rating and attract big investor attention. As financial literacy rises, as millions open new demat accounts, and as SIP investing becomes a lifestyle habit, BSE sits right at the center of its transformation. It enjoys high entry barriers. No new exchange can easily compete. Strong tech infrastructure, multiple income streams from trading, data, listings, and SME platforms. BSE may not look flashy or trending, but it's solid, dependable, and quietly powerful. And for long-term investors, that's exactly what matters. Growth with safety. As more Indians start investing, as digital onboarding becomes seamless, and as NSE's IPO hits the market, BSE is perfectly positioned to ride that next wave of investor participation. Yes, its quarterly profits might fluctuate a bit because revenues depend on market activity, but over the long term, the direction is only upward. Investing in BSE is not just investing in one company. It's a bet on India's entire stock market ecosystem. Every time a new investor opens a demat account or places their first trade, BSE stands right there as the first gateway to India's financial markets. It's not loud, but it's legendary. And as India's equity culture continues to explode, BSE will remain at the heart of that revolution. So these are the 5 stocks I personally believe have strong long-term potential. In the stock market, patience and understanding make all the difference. So don't follow hype, do your own research, invest wisely, and focus on building wealth the smart way. If you found this video valuable, like it, share it with your friends and family, and subscribe to the channel. This is Bala helping you grow grow smarter, not just richer. I will see you in the next video. Until then, signing off.